Well, is this it? Is this finally the looming bust we've all been expecting would come eventually in the real estate market? Hey, I'm John Freitas, local real estate agent with Sutton Group Summit Realty in Southwest Mississauga. And today I'm going to take you through the actual data, what we've seen over the last several months, and to try and predict to a certain extent what we think we're going to see into 2023. Now, not anyone can actually predict the real estate market, but what we're going to use is we're going to use trends. We're going to talk through some of the trends that we're looking at and we're seeing, as well as historically what's happened in the past, to try and get to some sort of conclusion as to what's going to happen, not in the long term, but in the short term, 6 months, maybe 9-month window. Especially if you're currently in the market to transact, I think you want to listen. Okay, so today is October 27th, and it's pretty clear by the Bank of Canada's increase in rate hike yesterday by another 50 basis points that they're not taking the foot off the pedal per se on the trajectory they're trying to include, which is one of pressure to reduce inflation and to try and level out the spending that's happening. So with that being said, they have a goal in mind. Their goal obviously is to try and level back the market to a predictive place where you're seeing between a 1 to 3% increase in real estate prices year over year. Now, okay, we're going to get a little bit more into that in a second, but let's dig into some of the data so you know kind of where we were, where are we now, what does that potentially mean for the next few months. So if we take a look at this first slide here, this just shows you in the last 3 months the price variance change in the average home price for detached properties or non-condo properties. You can see across the board negative declines all over the board, but significant more so in just a few areas here. If you see Vaughan, Mississauga, Toronto, Milton, Burlington, Brampton, and Oakville. And in those areas, this is what stands out to me. These three pockets here had seen some of the biggest decreases in property values for the non-condo segment in the last 3 months. So let's dig into first Toronto. So with Toronto, you can see here, obviously the decline that's taken place since essentially the peak that we had seen back at the very beginning of March of this year. And that equated to a negative 7.2% in sale price, or about $250,000 on average. Now, going back to our areas of interest, we see first here in Vaughan a 9% decrease in average price and $230,000 in equity. Now, the interesting thing with Vaughan is you typically will see a spike in May because of the spring market. In Vaughan, you could certainly see that spike that took place in May. But in Vaughan, that's an exceptional spike compared to what you'll see in the other comparable regions. And that is because year over year at that time, units available in the Vaughan area were down over 50%. So that was clearly leading the pack in terms of lack of units available across the region. So that's why you see such a large spike there. When we move on to the next one being Brampton, you can see an 8% decrease, $140,000 decrease in equity. And again, you see a little bit of a spike in the spring market, but then the decline afterwards. And then finally in Mississauga, where I transact most of my business, there's almost 11% decrease and almost a $300,000 equity difference. Now, obviously those three markets have fallen fairly hard because, to be totally frank and honest, they're the ones that took off the most sometime right around the beginning of 2021. So this is really about kind of bringing back those areas that took off so much to bring them back to a much more stable or in line with other regions across the marketplace. Now, this isn't all doom and gloom, because if you really think about it, or if you break it down, yes, in the last 3 months, it doesn't look very good. As a matter of fact, since March, it hasn't seen great days in terms of the value and equity that's being built. in non-condo properties. However, if you do go back to March of 2020, which is pre-pandemic, and you take a look at those numbers, well, now let's take a look at Mississauga for March of 2020. You can see it's actually up 12.7%. And the equity itself that has been built is $164,000. So if you had bought a non-condo property about, well, more than 3 years ago, you're still in an excellent position in the marketplace. Saying all that, let's touch briefly on what's happening on the condo market. You'll see the trajectory for condos really are not that different than what you're looking at for non-condo, except they are faring better than detached homes or non-condo style homes, primarily because of the availability in a lower price point to start. So this slide here basically shows you what the condo purchases are by price range, and clearly what sticks out are the segments between $400,000 to $599,000 and $600,000 to $799,000. That makes up over 75% of the segment of condos in terms of what's being transacted. And you can see the interesting thing here, the light blue color is 2021 statistics and the darker blue is 2020. You can see in 2021, most of the segments had seen improvement in those higher price pointed condos. The one that you see a reversal is in one of the lowest condo price points, which is between $400 and $599, telling me that there's a much more reserved approach in 2022 to purchases, specifically in the condo area, but it doesn't change much when you look at the same sort of factors in the detached home or non-condo segment. Much more reserved approach, kind of a wait and see approach, certainly is what I think that shows clearly. So now, what do we think is going to happen for the first few months of 2023? So as a buyer in the marketplace, you can see clearly by the data that I just showed you, we're at some record low prices in terms of property, specifically in the detached segment or the non-condo segment. It's a good time to buy a property. In saying that, based on the trajectory that I'm seeing, I still think that a wait and see approach necessarily isn't the wrong thing to do if you're not in a big hurry. You can be choosy and selective over the next several months, in my opinion. The one caveat to that is if there wasn't the added factor that we have a lot of immigration happening and the demand on properties, I would suggest that that might continue directly through 2023, but hard to say. Hard to say exactly how much further prices will drop. Some people say about 10%. I've even seen as high as 18% more. I would suggest that 10% to 15% is probably a fair guess in terms of what we're going to see in 2023, or at least a portion of 2023. Now, if you're a seller, and you need to sell, obviously, do it now, because I think you're going to lose a little bit potentially of equity as we get into the spring of 2023. However, in saying that, again, these thoughts are very broad, meaning if you have a specific property, you know, not every property is made the same, not every location is built the same. So there are different demand levels across different pockets and properties. So even though the general trajectory might reflect what I'm saying, your property might stand out slightly above others, and you're not going to be seeing, you know, a 50% increase in market value over your neighbor. However, you might be seeing a 2 to 5% increase potentially, depending on how your property presents. So that's kind of where I'm seeing the next several months pan out. Still a good market, certainly, to get into and buy a property. A little bit difficult if you're a first-time buyer, obviously, because the rates are so high. However, the condo market, I think, is where you want to focus most of your attention. If that is the lifestyle that you're interested in, go after that. If you want more information, more tips, and more ideas around what's happening in the real estate market or what predictions might be taking place, feel free to connect with me. I'd love to talk real estate. Take care. Talk soon. Bye.